Good morning, everyone. So I'm chat if you can hear me. And all right, we are going to today's Friday. Only traded 3 days this week because Wednesday was FOMC and Thursday the market was closed. Wednesday did end up being a great day to trade, but it's really just a hit or miss with those massive FOMC interest rate days. And with the next day being closed, I don't really have much of an edge there from the get go. So I decided to sit it out, but I would have been green if I traded it. So, anyways, today was the first day since Tuesday that I traded, and it was a really rough start. My trades were flawless. I did my job to the best of my ability, but the problem was the contracts weren't really complying. Now, as far as the pre market bias of today goes, yes, we're in supply and somewhat overbought, which are a couple reasons to be bearish, but there are much more reasons to be bullish. Obviously, the trend is one thing, but just like usual, we have multiple pivots overhead. We have made lower lows. Look at this demand bounce here. Look at the lower lows we've made. I mean, we perfectly swept this low. And Q as well. So we were chopping down, making lower lows, and invalidating this entire drop. I am bullish to the nearest pivots, and which those are all marked out in yellow. So this is obviously pretty bullish. Now, keep in mind, if you look on the 15-minute chart, it very well could be an inverse head and shoulders. So you can see this here. So while I am pretty bullish, a right shoulder could very easily form. And so that means I'm bullish right now, but it's not like a perma bull or anything. Market was looking really interesting before market opened. There was a lot of volume. I'm not really sure why the market was moving so crazy before market opened. But anyways, market opened. And pretty much if we invalidate this drop on ES, I'm going to have to be in. Well, I did end up entering QQQ calls pretty early on, half size. I want to say it was on this candle pretty much. And it was roughly up here. The candle put in a little selling look after I entered. But I mean, this is pretty clear. I try not to enter on the first candle market open too often. But a couple things. The NQ was clearly a lot stronger than ES. It swept buy side liquidity with this buying wick here. It's invalidated pretty much the entire drop. And even ES, which is weaker than NQ, put in a massive buying wick, sweeping a little bit of buy side. But I do have to enter half size because not only am I in heavy supply, but it's the first candle of market open. So I enter half size. I end up filling my contracts at roughly 54 cents here. And next candle's red. Now I can't average down unless we make a lower low. But I can't add the rest of my position if we invalidate this drop again, right? Those are the only ways I can add. We invalidate this drop, which means if we come all the way back up to here, or I make a lower low. And even if I make a lower low, that's not guaranteed for me to add because it could just make a lower low, but do so in a bearish fashion without a buying wick, without anything. So those are the two ways that I can add my second half to this trade. And I end up adding my second half on this candle here. It did end up putting a selling wick after I added. But I added pretty much where I entered initially, like right around right here. But the contract started going to hell. Okay, so I entered initially at 54 cents, pretty much here. I added my second half to this trade where I entered at the same price, roughly 22.88, 22.89, 22.089 on NQ. But my ad, and keep in mind, I've only been in this trade for like 2.5 minutes now. 2 minutes I've been in this trade. My average down was at 45 cents. So these calls, by the time I averaged down, I was down almost 20% on this trade, which is absolutely absurd considering I've only been in the trade for 2 minutes and it's at the same price I entered. So right then, that is terrible. That is a huge red flag. Now, keep in mind, last week was pretty choppy, but didn't really affect the performance too much. Today was something special. So we end up dropping a little bit, and then we break to the upside. I'm still red on this candle. My average is 49 cents. I think I hit 49 cents once on this candle, and then it dropped back to like 45. We're going up, and it's looking really good. I end up filling SPX calls on this candle because right here, ES starts flipping stronger than NQ. And right as the next candle opened and invalidated the selling wick, I did enter SPX calls, but pretty light. Less than half size trade. Stronger than NQ at the moment. You can see these two very large green candles here, and then this green candle as well. Now, it did put in a selling wick right after I entered, unfortunately. That did end up fixing itself, but I did end up entering SPX calls as well, light at 2.5. So now I'm in roughly 1.25 to 1.5x leverage, something like that. So a little bit heavier. It's very likely it hit PT. But here is ES being a lot stronger. It's beautiful right now. And here's price action going up, looking really good. ES takes out a higher high. This would be a good place to trim, except we are so close to PT that I just don't. Enter those SPX calls at 2.5. Right here, they hit 3.2 for roughly 20, almost 30% gains, like 25% gains-ish. Meanwhile, I have now been in this NQ trade for 8 minutes, and it's pretty much done nothing but go up. At the high, it hit plus 160 ticks, which for futures, that would be for one mini. That would be about $800 profit. I am red on this trade right here. And on the next candle as well. At the highest point of this candle, the calls hit 52 cents. Remember, I entered here at 54. My average is now 49. When this candle closed, I was red on my position. The chop was like on the pretty much the worst chop for options that I've seen this year. Like atrocious. And sometimes you do end up getting a short squeeze afterwards, but I mean, if that many people are selling their calls into this move, that's red flags all over. But not even including the red flags that is of how much more likely price action is to reverse as a result, because why would everyone be selling if it's going to go up? From a pure risk standpoint, if my calls are struggling to even just stay at break even while the market is going up, and it's not like it's going up slowly, it's shooting up right now. If my calls are struggling to stay at break even while price action is shooting upwards, what are the calls going to do when price action stops shooting up? They're going to start dropping a good amount. What are we going to do if price action pulls back? The calls are going to absolutely get annihilated. And I watched as every single one of these selling wicks form, my calls dumped back into the red, back to like 42 cents, back down 15%. So roughly towards the top here, something I always do if something like this happens, I start trimming a bunch at break even. You have to de-expose yourself to risk. You have to do it. Yes, sometimes you're going to miss out on gains as a result, but the risk is now astronomically high. The only way you make money on this trade is if price action keeps going up super steep like this for an extended period of time. But if it does anything else out of all the other things it could do, it can go up slowly, I'd lose money. It can go sideways, I would lose more money. It can go down slowly, I would lose a lot more money. Or it can go down fast, and these contracts would get annihilated. So 1 out of the, 5 possibilities could possibly make me money. You have to trim. You have to trim. So I trimmed here on QQQ, pretty much break even. I filled some at 48. I filled some at 50 cents. I sold a little more than half my position here. I would have sold all of it if I was nowhere near the PT, but I was. The PT's very close. It's very bullish. Unfortunately, we do drop. And on this drop, I actually so on this buying wick, I actually take some of the money that I trimmed off, almost all of it, and put it into SPX. So I put it into SPX calls here. Didn't really change my average at all. So I think I filled those SPX. I mean, they dropped to 2.2, I believe. on that. So the SPX calls were still chopping a good amount. Like on the low of that buying week, they dropped to like 2.2 or 2.3. Remember, I entered 2.5, but because NQ is so bad, I don't even notice that SPX is not great either. So I moved money into SPX. My average is pretty much still the same. Maybe it dropped a tiny bit, like 2.45. But now between both positions, I'm in one normal size trade. I didn't add everything that I trimmed off of NQ. Um, so I'm maybe a little bit larger than one full size trade, but pretty much one full size trade between the both of them. And this was bullish here. This looks great. 10 out of 10, but unfortunately NQ had other ideas. We end up dropping here, and calls got annihilated. Obviously, I can't afford to honor my stop loss anymore because it's too far away. When this red candle happened on NQ, I was down by like 30%. Whereas in futures, I still would have been green. So I end up moving my stop loss up quite a bit. And honestly, if I get one solid momentum candle into my red, I'm out. Stopped out on this candle. Didn't even let the candle close all the way. Stopped out roughly here. So I pretty much had to play this trade like it was a 3.0 risk to award. I have no choice. So it doesn't look like it's a big loss. Well, it wasn't a big loss financially because I was wise and de-risked myself when I saw that the calls weren't doing good. But as far as a percent loss, this doesn't look like a big percent loss. I mean, these entries were perfect. It did nothing, pretty much nothing but go up ever since I entered, and it just happened to barely miss PT, which is going to happen sometimes, right? There's nothing you can do about it. But I cut very early. My stop loss was more than twice the distance away. Only this trade had like a 1.3 risk reward. I played it as 3.0. But when I stopped out, those calls were at 25 cents for minus 49% is what I filled them at. Minus 49% on those QQQ loss. That's the biggest percent loss on an alert that I've had in months. I think I've had one loss similar to that. I've had one loss this year about like 40-ish% for the same reason. Contracts chopped a ton. But that there's nothing you can do. The only thing you can do when that happens is trim when you're break even to de-risk because you need it. And then you have to move your stop loss closer. Typically, I only get out because of the chart. The only times I'll stop out because of money reasons or because of what the contracts are doing is that right there. If chop is horrendous and I can't afford to be exposed to risk. Because if I wait for my initial stop loss, which is roughly down here, it's like minus 70%. No, thank you. Now, granted, it wasn't that bad because, again, I was maybe a little bit less. I don't remember exactly, but I believe I was a little bit less than half size in QQQ. So that wasn't a very big deal. You know, it's like I took roughly a 24% loss on it. Uh, SPX was more of a full size loss. It was closer to full size, not quite there. It was like 2/3 size, and that was minus 28% at 1.8. Stop loss at 1.8. Now again, it was green. It did get pre-market high. It did say you could trim there, but it's so close to PT. I'm not selling right before PT. I never have. I never will unless there's red flags all over the place. And there really wasn't on ES because we actually kind of have a perfect double top here at ES. So at some point when price action comes back up, which doesn't look like today, it's going to be a great long trade to take again. But anyway, so those were the first two trades of the day. Perfect trades, perfect entries. Price action went up after I entered. Sentiment was correct. Very unlucky that it barely missed my PTs, but also very unlucky contracts chopped so dang hard. And you know, when contracts are chopping hard like that, you should be in fear. You should not be in hope, right? A lot of people when they see their contracts start chopping, getting really cheap, they can't help but see it as a buying opportunity, so they just keep buying more. I've been there as well, which is why I know that. But you're supposed to be fearful because everyone's dumping their calls for a reason right now. Way more than the Greeks should be decaying the calls. So you should be fearful. So that also prepares me to stop out in advance and know exactly what to look for. Now, if I wasn't in calls or if we did hit price target and I was able to sell at my price target, this would be my put entry. Because not only would we have swept a perfect pivot, like we would have a perfect liquidity sweep, But we've invalidated majority of the move. I have nice pivots below. Like, this is a good trade right here. But unfortunately, we barely missed my PT. So instead of entering puts here, I have to stop out. And I'm not a person to reverse my trade and just hop blindly into puts. I can't do that. Especially with that PT missing, I still have bullish sentiment. So I can't take the same trade. But if we just got a couple more green candles today would have been a 100% accurate day. I would have ended up making maybe 10% on KQQ. It would have made a good amount, like 30 to 40%, 35 to 40% on SPX. So was so close to being a 100% accurate day, but that PT missed and the contracts chopped to hell. So it was a good stop loss, very good stop loss. But now I have a problem. So obviously the market, the trending is bearish now, but I cannot enter short on a pivot. I try not to take continuation trades on pivots a majority of the time. Here's a minor pivot here. Here's a minor one here. And then we have some more down here, some more right here. So on and so forth. I didn't really mark this one. But here are some pivots that we have. All right, I cannot enter puts on a pivot, and I need bearish consolidation. Those are the things I need. So if we go straight down, I can't get in. I'll miss all of it. We start bouncing. I can't enter. We're making lower lows. We're on liquidity. We can easily reverse from here. ES is a lot stronger than NQ. ES starts putting in a bear pennant as well here, which indicates that NQ is going to drop further down. But NQ is chopping downwards, making lower lows with buying wicks, which is signaling bullish for a potential short squeeze. And if that happens, with ES being stronger, it's going to bounce a lot harder. So I still have to wait. I need them to get a decent amount under this pivot. Well, now we're under it, and you could say this is another pivot right here. There's a bunch. But we're under pivots now. We're putting in a nice buying wick. Okay. I need a bounce, and I need it to invalidate, or I need some kind of bearish consolidation. Now we're a decent amount below the pivots. Okay, this is typically an area where we'll chop. We did bounce, and we did get it to invalidate, but not big enough. This is just a couple of candles here. It doesn't really mean anything. But now we're starting to chop sideways. I start watching, because if I get, if I get something like this, I need a higher high, and I need it to invalidate. If I get that, that's bearish consolidation. I can take that to the pivots below. That's exactly what I need. And this candle here, I end up entering right after this candle closed into the beginning of the next candle. This candle kind of took me by surprise because this candle only flipped red in like the last 10 seconds, right? This trade came so fast because for this entire candle, it was a green candle, unless, I was mistaken. I was having a conversation at the time, but from my understanding, this candle was a green candle pretty much the entire time. And in the last like 10, maybe 15 seconds, it dumped and invalidated. So I quickly entered, just market entered, QQQ puts and SPX puts, right? The NASDAQ was a little bit weaker on the way down, but NQ bounced a little harder during this bounce, right? So NQ was weaker on the way down, but it bounced higher up than ES did. ES only bounced up to like here on NQ. So NQ dropped harder. ES didn't bounce as hard. I went half size in both, totaling pretty much one full size position. Actually, a little bit more than a full size position, maybe like 1.2x. But I don't have the time to just, especially on this trade, I didn't have the time to do the math on exactly how much dollars am I putting into it because the contracts are different prices. You just gotta eyeball it sometimes. But anyways. These are kind of what the PTs are looking like. Half size on each. No plans to add. This bearish consolidation is either going to play out or it doesn't. The next candle opens. I pretty much fill in like... I filled QQQ because I was first in that. I filled QQQ right at the close of the candle, and I filled SPX right at the beginning of the next candle. Which, I end up filling the SPX puts at 2.7 and QQQ 0-day puts at 62 cents. Now, SPX was still chopping a decent bit, but we did end up heading down, and I couldn't sell anything until at least the first PT. So we actually barely missed it here. So, PTSD of the first trade started kicking in because, what are the chances? 2 setups in a row barely missed my pivot price target. Not likely, but I'm just happy the entry was good, just like the last trades, right? the entry's good. It started dropping, so that's nice. But we did end up hitting the pivot. I trimmed half of everything right here, right when it hit. I got plus 38% gains on KQ puts and 18% on SPX, and I still had half my position left. Kind of a heavier trim because we did bounce right before the PT, and then it just came back down and swept it. And because we bounced right before, like if you're bouncing right before you get to a pivot, that's more indicative that it doesn't want to be there. It's just more indicative of a reversal overall. Well, we did start bouncing around. I didn't really trim more here, but ES, I was very close to stopping out of the rest of my SPX position because right here they were chopping. So right here I was right on the trade. I entered at 2.7 here. They dropped to roughly 2.4 and 2.5 here. And right here they dropped to 2.2. Well, I was planning on stopping out on this candle right here. This was pretty much going to be my stop out candle. But the issue is NQ is still so much weaker than ES, and ES is chopping up. The problem is, though, NQ is weaker and it's making lower lows and bouncing, which is bullish. But this was a really, really tough decision because ES is still nowhere near my original stop. And honestly, I was a little bit more willing to stop out due to poor psychology, I guess, because what happened with this trade? I was green, and the market took all my monies away. So naturally, if the next trade, you know, I wanted to finish green on these trades, right? I was okay and happy with, 2 red trades right out of the gate, the first 2, which there's nothing I can do. But I wouldn't be very happy if these 2 trades are green to red trades as well. And that was kind of the concern because with the way the contracts are chopping, if I let SPX get all the way to stop loss, I'm going to finish this trade red, right? So a little bit of poor psychology there made me a little bit more willing to stop out, but it was valid though because ES is a lot stronger than NQ, and NQ is showing indications of reversing. So I just wanted to wait one more candle, not even one more candle, like 10 seconds of the first candle, and we shot up and we put in a tiny little selling wick. So we put in a doji signifying indecision, and NQ invalidated this buying wick here, or most of it, with a red candle. So now I have to wait one more candle. At this point, my hard stop loss was if this selling wick invalidated. And now keep in mind, maybe it could have swept me, but statistically speaking, if I stop out here, it is very likely to at least continue to where my original stop loss was. So, yeah, very hard stop loss here if this selling wick invalidates on ES. This candle ends up being red, and I'm able to take my finger off the trigger. I don't really think I'm in the clear or anything. But then this happens, and it is freaking beautiful. I end up dumping my entire position minus a tiny runner on this candle, obviously. I mean, we're in heavy demand on NQ. Look at the volume spike. Look at the buying wick. That's an indication of a reversal right there. But so the last half for those trades, because I was still half size. Well, I entered half in each, one total position, one normal size position between the both of them, and I trimmed half of that. Well, the QQQ puts got to 120. Sorry, the SPX puts got to 125% gains, and QQQ puts got right around 200%, exactly like 198% gains. So that was actually enough to barely flip me green on the day. Now, I would be a lot more green on the day if I were full size in each, but realistically, I was a quarter size in each. And that the losses in the beginning was a little bit more than a full size. So the minus 28% and the minus 49%. The 49% was like a quarter size position. And the SPX position was pretty close to a full size position. So realistically, it's like I took a full size loss there, but so yeah, anyways, I was only a little bit green today because I was pretty light in these trades, which I had to be. I wasn't willing to risk more than what was in there. And it was a perfect trim here, so I'm happy with it. But I'm very happy to end up finishing today green. I thought today was going to be like my first red day in a couple of weeks, which is fine. I'm definitely due for a red day. It's been a while. But regardless, it was kind of looking like a mild red day. If these trades, before these trades even happened, I wasn't red by much. You know, because I was wise and trimmed a lot of NQ, it's not like I took a huge loss on it. Even though it's 49%, I only had a little bit of contracts. Um, you know, I would have been red on the day by pretty much one negative 35% trade, full size, which ain't bad. And if I lost these trades, I would have been red by, you know, two full size 30% trades. So again, it wasn't anything crazy. But yeah, I am pretty thankful to end up finishing today red. And I did sell here. Now, if you did hold blindly for some crazy reason, it did end up going a lot further. But just goes to show, if you're trading options, look at the premiums. Take it seriously because this morning's chop was so bad, you'd have to be an absolute fool to not expect a huge drop to happen. Now, that doesn't mean you enter puts. You can't enter puts off that sentiment because it's not a valid hypothesis. Where do you stop out? That's why one of the reasons why I don't trade options flow anymore, because if I saw really bullish options flow for, I don't know, Tesla, and that was my reason behind a trade, and I entered the trade, well, if I'm getting in because I'm seeing a bunch of people buy calls on the dark pool, and I'm seeing a lot of dark pool blocks, like I'm seeing a lot of order blocks come in, where the hell do you stop out? If you're bullish because people are buying calls, you don't know if they're planning on just day trading those calls. You don't know if they're going to hold those calls for months. You don't know if those calls are actually just a hedge trade and they're net short. You don't know any of that. So if you enter a trade just because you're bullish or bearish, you can't do it. So while I did expect a big drop to happen, I can't just flip the puts because there's no specific place on the chart where that initial hypothesis is invalidated. That's why I'm so TA focused. You know, I get into a trade because my chart tells me this so that I know exactly what price action needs to do for that initial hypothesis to be invalidated and vice versa. I know exactly where I need to take profits so I know that that initial hypothesis is fulfilled. And if we continue dropping or continue going, who cares? But you want to play within your edge. And that's pretty much all I do. But yeah. So basically, in short, pay attention to the options chopping. Because if I didn't stop out early, it would have been a much bigger loss. I don't know if I would have flipped green on the day. Like, I'm not green by a lot. So I assume if I didn't stop out there, I would have still been red or maybe break even on the day, even after those two huge trades. But also, if you don't have the ability to stop loss because your psychology is absolutely horrendous, yeah, you're gonna get absolutely destroyed. So calls chopped a ton. Look what ended up happening. We ended up getting a huge drop, and yeah, that chop this morning was really really bad. That was the worst chop that I've seen all year by far. So this drop does not surprise me one bit. But regardless, every trade was executed flawlessly. Every hypothesis was perfect. You know, every single trade went at least the correct direction for a duration of time. So I'm pretty happy with today's trading, the psychology, the execution. It was a good trading day. It just sucked that, you know, the contracts were so terrible there. And it sucks that it barely missed my PT. But as far as the things that I can control, I'd say today was absolutely flawless trading. Like, absolutely flawless trading. So with that being said, does anyone have any questions regarding any of the analysis or trades that I took this morning? What is a dark pool? I'm not going to go into it too much, but most major institutions trade on the dark pool. They don't trade on the open market. So like dark pool and options flow within the dark. So there's a dark pool where the massive share blocks are traded, right? If Berkshire Hathaway wants to buy CRM or something, they want to buy a stock, that trade's going to be executed on the dark pool. And the whole point of the dark pool is to hide intent, right? So you're not going to see the volume on your chart. If I'm looking at Tesla right now and someone executes a 500,000 share dark pool order, you're not going to see that volume spike on your chart. So it hides intent, it hides direction, as well as options flow, and it allows huge entities to buy in at decent prices, right? Because if they just buy on the open market with 500,000 shares, it's just going to skyrocket the stock, and they're going to get a terrible average. and then it's going to sell off, right? Everyone's going to take profits and they get terrible. It's just terrible. So the dark pool is used for large institutions to enter and exit while concealing their intent and having minimal effect on the market. And never heard the word order block. Most people use order blocks. Okay, when you hear the average retail trader talk about order block, they're talking about some bullshit on their chart. I'm talking about dark pool order blocks, which are uh, that's what the orders come in. They're order blocks. They're 500,000 share order blocks, and you see them on the time. I used to use black box stocks. It's like 100 something bucks a month. They might have upped it to 150. It's really good. Black box stocks is great. It's great options flow, great data. But that's why I stopped using it. My TA got so good that I didn't need it anymore. And my sentiment that I got from looking at the dark pool and options flow was hard to stop loss out of because there wasn't a specific place on the chart where my sentiment that came from the options flow is invalidated. But if you go to the, let me see, if you go to the large sweepers, large blocks, there you go. Go to this channel. I'm gonna link it to you. We'll do it in the chat right now. Go to this channel. We have dark pool data in this server. There you go. Large blocks. Click on that. Those are large order blocks. That's what an order block is. And those are all executed on the dark pool, or most of them are executed on the dark pool. But anyways, all right. Yeah, that is it from me. So good day. Look at the supply and demand on ES, by the way. Beautiful day for supply and demand. Unfortunately, supply end up winning the battle there at the top. But yeah, that's it for me. Good day. Good way to end the week. I'm very happy to be green. Every day that I've traded lately has been green as far as options go. So we'll see what next week holds. But I will let you guys know when this recording is posted. And yeah, good luck if you continue to trade. And if you guys need anything, you guys know where to find me. You can DM me or just ping me in the server. But all right, well, I will see you guys later.